Awesome. Okay, what's good, traders? It's your boy Casey back again for another video. In this video, we're going to be doing a top-down analysis of some of the markets that I am actively trading. I'm going to be sharing my thought process, what I think is going on, what the current macroeconomic situation is looking like, and yeah, if you guys resonate with what I'm saying, my approach to the markets, feel free to let me know in the comments. Drop a like, subscribe to my channel. I'm going to make this a daily thing where I post updates and we talk about all things market related. Okay, and I'm also going to try and create a Discord chat or a Telegram chat so we can actually communicate live, real time, and assess the markets together as everything is playing out. Okay, so right now we're going to be taking a look at the DXY. This is the dollar strength index. Essentially, this is the economical driving factor. Whatever the dollar does, every other asset class reacts to it in some type of way. Okay, so cool, let's get straight into it. So based off this chart, I do see we have some support that was formed here. These were our highs acting as resistance. We broke out, formed support, and now we're trending higher. Okay, that's very obvious. We don't need Ray Dalio to tell us that's cool. So based off this, I can simply draw my Fibonacci to give us a kind of a guideline as to where we're going and what's currently going on. This Fibonacci is customized to my style of trading, so I can give you details as to how you can customize yours on a one-on-one session. If you want to do that, we can set something up. Okay, so boom, this is the 8-month time frame. Okay, meaning each candlestick here represents 8 months of price action. Okay, quite a kind of a long time, but it's definitely good to reference this just to have a overall type of direction as to what's going on. Cool. So now we have this. I do see here, these were all our buying levels, like I mentioned in my previous videos. This is how I use it, just to understand where my buying levels are. Cool, that's the 8-month time frame. Let's go down to the 4-month. So this is the 4-month. Each candlestick here is what happened in a quarter, so you understand that. Let's flip this around so I can kind of do some more technical analysis. So let's bring this here. We got that breakout from there. I do see we're having some sort of okay, cool. That's all I really need. Okay, that, and then let me bring this to fine tune it with that. Boom, beautiful, cool. Now let's go. So once we have that kind of fine tuned, it's easy to tell what's going on now. And you may ask, what's going on now? What's going on now is that the dollar is at a very pivotal point. The dollar is at a point where, give me a second. The dollar is at a point where it could get bid or it could get sold off. That's why I call it pivotal, because it's not a one-way street. A lot of factors can influence that. Where we're currently positioned in the markets. Okay, so let me do this back up here. Beautiful, cool. Now we have that, we can lock it in place and we can get rid of this. Okay, so boom, what we can see right now is the dollar has already broken out of this support channel. If you don't know, now you know. The dollar is in a heavy downtrend since January. Since Trump took over his presidency, we've been de-dollarizing. The world has been getting rid of their dollar denominated assets. They're selling bonds, they're selling their ties to the US, and they're going into things like gold, Bitcoin. We're de-dollarizing essentially. Silver is at an all-time high. Everything is back up. Okay, so cool, we understand that this is where we are. We don't need to cloud ourselves with the previous months, whatever has been going on. This is where we are right now in the current market ecosystem. We have officially broken support. Support is here. For those that don't understand what support is, we broke out of support, this support channel, and so you can say we are in a downtrend. So we understand that right? But how do we navigate it? Let's go down to a smaller time frame. Now we're on the monthly time frame. If you recall, dollar was bullish here when the Fed cut rates in September. We had bullish dollar. Now the Feds have already signaled that there's a high probability they're going to cut rates in September again next month. So we can forecast expect similar price action. They cut rates last year, something like that happened. We can kind of forecast that if they do the same thing, we might see similar price action, something similar play out. And that's a very good what's it called, thesis to have in regards to the market. But we actually have to fine tune it and make sure that we are covering our tracks and but yeah, let's dive into the technicalities of what's going on right now. So from what I can see here, we do have this. We have something like that going on. And we also, yeah, we have this going on. So just based off this, just based off this right here, right? I can draw this. We had this low, this high. I inverted my chart right now, so it might be looking weird to you. Like I said, if you don't know how to invert your chart, it's Option I on a Mac, probably Control I on a Windows machine. Cool. So right now my chart is inverted. So actually you can right click here and invert scale. That's how you can invert your chart. Okay. Cool. So based off this, we had our high here, and then we started trending lower. Cool. We have this going on. So this right here is my guide for selling. Okay, so I want to be selling at these levels. Awesome. Understood. You could have sold here. Let me just show you how that would have worked if you were in tune and really understood market and how market works. You could have been selling at those levels ideally. So now you might ask, why aren't we selling at this level right now? We're not selling right now because it hasn't confirmed to us to sell. If we were to have something like this happen, like a close below here, then we can sell at the highs. If we have something like that play out, then it makes sense to sell. But right now, you don't want to sell because it hasn't confirmed to us that the dollar bears are still in the market. It hasn't confirmed that to us, so you don't want to be selling right now until we see price action close like it did here. You see price closed in here with this black candle, but they didn't continue that momentum. Rather, what happened was the buyers stepped back in because I don't know why they stepped back in. Maybe they saw that they were forecasting the rate cuts or things of that nature, and they're forecasting that the dollar might gain some strength before, I don't know, continuing its its bear rally or whatever. But right now price action hasn't confirmed to us to be in sales on the dollar. So right now you still want to kind of hold your dollar longs until we get that sell confirmation. Okay, cool. So going based off this right now, this is how I'm navigating the dollar. I'm just going to delete all these. Cool. So this is how I'm navigating the dollar. So we already previously highlighted that the dollar has been in an uptrend. So what I'm going to do is I'm going to mute this Fibonacci, and then let's get back here. So just going based off this, right, based off price action on the monthly time frame, we can kind of see that we've been respecting this area here. We've been respecting that trend line. Okay, I'm going to make this blue to represent supports. So cool. Whenever price got to these levels, we got some type of bullish price action. The buyers stepped in. They came close, they still bought. They came close, they bought, and now we're here again at that level. So what do you think is going to happen, if I may ask you? What has the higher probability of happening? Do you think is a higher probability we break out of that trend line, or is the higher probability in the fact that we can bounce off and continue going higher on the dollar? Tell me, what do you think makes the most sense just looking back in time. If you ask me, I think it's very, very likely that we might bounce off that trend line and continue going higher on the dollar. I mean, why not? We've been bearish the dollar for about how many months now? This has been almost half a year. Like, you know, almost 6 months we've been bearish the dollar. I feel there's more than enough reason for us to, you know, want to appreciate in the value of the dollar for a bit. I don't see no other economy that's as strong as the dollar. I don't see no other economy that's outpacing the dollar right now, or outpacing the US right now. Yes, the unemployment is a huge red flag. Trump's policy is also not the best right now, but the dollar is still king. The US is still king until something else comes up that dethrones it. But as of right now, as of current day and age, the dollar is still king. So yeah, this is how I'm navigating this. So since we have this here, right, I can simply take my Fibonacci from here to here, right? And then I can change this to, let's just change this to green, and let's make this okay, cool. So if I'm playing this game, or my approach to buying the dollar, this is how I'll be playing it. Okay, let's go down to the smaller time frame, the 2 months. I'm not going to be full on buy mode yet. I'd want to see some bullish confirmations above here. So if I can see some bullish candles close above here, right, some bullish closures above here, then it gives me enough you know, confirmations to want to buy the dollar higher, to want to bid it higher, right? I can bid it up to 103, where we have that resistance going on. Let me change this color to red. We have that resistance going on. I don't know if you guys caught it or if I was too fast, but if once you sharpen your eyes to see price action, you tend to see things like this. So I identified this bubble here, I identified this bubble here, and if you can see inside that, we have this trend line liquidity area, whatever you want to call it. I call it trend line liquidity, support, resistance, whatever. But you can see that. And I've trained my eyes to be able to see these games that the market tends to play. So I kind of have a solid view as to where to place my trend lines. Okay, cool. So now let's come in here on the 4-day. Let's go in closer again. So looking at this, let's flip it back. Mind you guys, I invert my charts all the time just for clarity. Okay, so looking at this right now, I can see we have this that has been acting as resistance. This area here has been acting as resistance, right? You see from here to here, it was literally a straight line down. Since Trump came into office to July, it's been a straight line down. This was an easy trade to play. But now we started breaking out here from July, and we're expecting rate cuts. So like I said, what happened here before in September last year when the Fed cut rates can also happen here again as well. And if that was to happen, that is going to give us a, from here to here is a 10% appreciation in the strength of the dollar. Even an 8% is good enough. We can make a lot of money off 8%. But like I said, we want to wait for confirmations. We want to wait for the candles to close above here before anticipating or forecasting that we can even come as high as here or even higher here. Okay, so that's literally the game right now. If you take a look, this is the 4-day time frame, this is the 2-day time frame. So on this right now, I can see that we've been holding support along this level here. The buyers have been holding support along that level. We can make this blue. Okay, let me get rid of whatever we don't need no more. We don't need that. We don't need this. Okay, so yeah, simply this is the game we're playing. And actually I can fine-tune this Fibonacci down here to this level. Give me a second, guys. Let's bring this down here. Cool. So what I did was, actually I'm not going to show you guys my secret sauce. You guys have to let me know you really want it. Okay, and how you can do that is comments. Let me see you. If you're really liking, then I'm going to share my secret sauce with you. Okay, cool. We bring that down here. From here now, we see here we've broken out of here, but you see there's still some friction. It's not smooth sailing, so we want to be very cautious and wait. So if we can get a candle close back within this trend line, that confirms to us that there's a high probability we can come higher here. I don't know if that's going away, but there's a high probability we can come to test that resistance up there, if not even break higher. But yeah, this is what I see right now on the dollar. This is what I would love to see play out long term, but like I said, it's a waiting game. We have to wait and see what wants to happen. Do not forget, we still have this resistance here, so price could very much come peak out here before selling again, just because we have that area where sellers are looking to buy in. Or like I said, we can very much extend this. The next selling area is about 105. So either way, we just have to wait and see. But right now, as of right now, I'm positioning myself for dollar appreciation. So I'm buying things like the US dollar, Japanese yen. I am buying anything dollar denominated. I'm buying USD CAD, selling pound right now. And actually, let's take a look at one of those actual currency pairs to, just to use as a means of cross-checking our analysis. So let's see. And like I said, right here we are at this also very pivotal level, so we can actually see sellers decide to step in and continue to make the dollar weaken the dollar even further. And if they do that, we're going to see a massive we're going to see price action point us in the downwards direction from this level. Okay, so all in all, it's a waiting game. We just have to see what price action is telling us to do, and then from there we go based off it. As technical traders, as technical analysts, we can only forecast, have our key levels where we want to observe how price reacts, and then we can go off those levels and off price action to execute our trades. Okay, but for now, I'm anticipating higher prices on the dollar because one, we're cutting rates, or one, the Fed plans on cutting rates, and two, doesn't get better than the dollar, man. The dollar is needed for the world to keep spinning. For everything to keep happening, the dollar has to keep being in circulation. It's not going anywhere. So with that being said, you want to essentially set yourself up for success with the dollar and understanding your technical analysis. So let's go into something like US dollar, Japanese yen, and let's see how that asset class is doing, or that currency market is doing. I'm gonna touch on this last before I end this video. I don't want it to be too long. I want it to be understandable, digestible, and interesting as well. So cool. This is the amazing dollar, Japanese yen. So let's, straight off the bat, we can actually identify some key trends that have been taking place. Right now we are on the 4 months time frame, meaning each candlestick here represents 4 months price action. Okay, let's come to the 12 months. Okay, we do have that. We have this. We have support down here. Cool. We have that going on. Cool. So what we can do, we can either do this from the low to the high. Take that there. Okay, that's what we can do. Cool. And then we can get rid of that. So this is my roadmap to success on the US dollar, Japanese yen. Cool. Let's come down to the 2 month time frame, see what's happening there. Okay, so just going based off this, it's very obvious to me that we are at another, or actually, let me see if I can fine tune this even better. Put that there. Where can I stretch this so it matches? Cool, we can do that. And you see everything matches. It makes sense. It makes sense. So we're just gonna go with this. So on the monthly time frame, we are at this level. We know whenever price approaches here, we get buyers step in, right? Buyers step in here, buyers step in here, buyers have stepped in here as well. Cool. So now with the buyers stepping in here, what we can expect to see is this current bearish candle flip bullish. So meaning if you're watching this right now, you want to go into your broker and place buys for the US dollar to come to the highs of 166.733. That's our next target on dollar yen. Okay, stop loss can be here or here at the lows, whichever one you want to do, but this is essentially where you want to, this is how I say you use the roadmap, the Fibonacci roadmap. Cool. So now we're here and this is what we're seeing. I can already kind of tell we have this trend line going on here. We have that going on. Cool. Let's get rid of this. Let's get rid of this. You guys get the gist. And then from that, what we can do is we can go in on the weekly time frame. You see we have this bullish. You see how the candles are respecting the trend line? You see how buyers are buying on these levels, buying on those levels, buying on those levels. You want to do the same thing, buying on those levels. Once you have a trend that's been established, don't fight the trend. Don't fight the overall trend, which is still bullish. Ride the trend, ride the wave, surf it, and take it higher. Okay, so based off this, let's go down to the four day time frame. We can see that the selling pressure on the dollar finished around here. Right, from here is kind of when it got exhausted. Cool. So based off that, it's a number of things we can do. Let me get rid of these Fibonacci levels as well. Sorry, these arrows as well, so we don't cluster everything up. You can take that off too, put it back later. Okay, cool. So we have this now. So what we can do here to paint a clear picture is we can take it from here to around here. Give me a second, I'm gonna scroll this down. Cool, we can do this. Let me bring this here. Yeah, here's fine. Okay, so we can take it from the lows and we stretch that to here. And if we stretch that to here, what does that tell us to do? That tells us to buy at these levels. I'm gonna make this blue to represent support. So if we're taking this from here to here, what we're simply saying is whenever price gets to any of these levels, I want to be buying. And where is price currently at? It's currently at this level. So what do you want to be doing? You want to be buying. Price was here, you bought. Price was at the green, you bought. Price was at the blue, you bought. You buy, you buy, you buy, you keep buying, okay? Till you get to your target and then you can close partials or whatever you want to do. But as of right now on the dollar, you want to bet that we're going to get higher. Why are we betting that it's going to get higher? Because the technicals tell us it's going to get higher. Okay, thank you so much for watching. I hope you guys get the gist. I hope my strategy and my approach to trading is interesting and you want to understand more about the way I see it, okay, but like I said, don't take everything I say like it's God that said it. It's not God. I'm not God speaking. Okay, price action tells us everything. We can from here definitely still come back and close, and then it's a whole different story. When that happens, we reassess. But for right now, be in line with the trend. Buy at the lows, sell high. Don't buy high. Don't change the narrative. Buy low, sell high. When price is low, you want to buy. When price is low, you want to buy. Okay, thank you so much, guys. Like, comment, share, subscribe, and I'll catch y'all tomorrow. We're buying the dollar. We're buying Bitcoin. If we get a good level, we're buying gold at good levels. But yeah, technicals is king, and I am the technical crew leader, and I'll catch y'all in the next video. Thank you so much. Take care. Have a beautiful evening. Enjoy. Share this to a friend who also trades. And bye, guys. Take care and have a good one.